moving on, let's welcome Ajay Bagga on the show as well. He needs no introduction. And Ajay sir, it's been a while that we have spoken to you. So firstly, tell us that what's your view coming in on the markets, because Ajay sir, some people are saying and holding this view that this year markets could be tough. You have to be really, really selective if you want to make money. What's your assessment?
Yeah, I think all bets are off till July. July 9th is an important date as the tariff agreements start coming in. That will help market sentiment. A 12-month view is quite strong. I think we'll be quite okay on a 12-month basis. But I think the next 2 months, and now it's down to the next 40, 45 days, we have to wait and watch. We have seen a lot of back and forth on the Trump administration. And those are the two big issues for the world. One, the global trade war, and where will tariffs eventually settle in? And the second big issue is the US fiscal deficit. I think these are the two things which are hurting global risk sentiment. In terms of flows, if you see, whenever there is a reduction in the tariff risk sentiment, we see flows coming to the US. Otherwise, we are seeing flows going largely to Europe and to Japan. Some amount coming into emerging markets as well. That also we are seeing.
Right. So you do. Hi, sir. This is Kanishka also joining in. So I wanted to ask you, you just said that flows are likely to now go to Europe and Japan and some in the emerging market space. So within that space, where do you think India is positioned? How do you see the outlook going forward for the Indian market?
Indian market is positioned well, I think, but for the global overhang, we would have seen even better inflows coming into the Indian markets. The issue is global. As far as the domestic macro goes, domestic earnings have been stable. They've not been great, but they've not been highly disappointing as well. It's a stable earnings outlook for nearly now 8 months are over, ninth month that we have spent below the previous all-time high. So in a minor downside. So markets have had a good time to consolidate. Again, the issue has been global, and we have seen a return of FIs in May. We expect that to continue further as well. But more issue is global than domestic, and that's why the favored sectors are also more domestic for now. But if you get some clarity on the US, say in the next 6 months, we get some more clarity on the Trump policy format, then IT could come back and you could see global sectors also getting benefited. But otherwise, for now, we are focusing more on the domestically oriented sectors.
All right, Ajay sir, we would love to deep dive more into your preferred sector. But firstly, on IT, how do you see the whole chatter around the AI transition? Because some of the experts also highlight that whenever we have witnessed a technology transition, then the Indian companies have adopted it very well, but at a later stage. So help us with your assessment with this AI boom, because we are already seeing some of the US companies and even Chinese companies taking the leap. But how will Indian players transition to that?
I think it's catching up. You are getting the end use cases. You are getting agentic software being launched. A lot of it will be how Microsoft is approaching it, where they have put their software on every cloud platform. So they are not only limiting themselves to Azure, but they're going across a lot of platforms and giving end-use solutions to customers for that. I think Indian companies will jumpstart that. You will see a lot of that coming in. But the big issue is the Chinese slowdown and the US looming slowdown. So we are looking at 0.5% growth in the US for this year, next year 1.6%, as against about a 2.5% growth that the last 3 years were seeing. So there is some amount of slowdown in the US, and what gets cut is first marketing and then software development. So that's what our companies are facing. You have to have a strong productivity push or a cost out kind of a push, that you're optimizing costs or you're reducing employment by bringing in AI agents. Those kind of things we have not transitioned into yet. Nobody in the world has really brought that singularity kind of stuff into AI yet. So the agents are very poor in comprehension, poor in offering solutions. Wherever the customer can enter the data, as happens in finance, which we have done, and our IT companies enabled that over the last 30 years. That was a big change. Like, earlier customers would walk into a branch, it was costing you 200, 300 rupees to serve a customer. Then we took it to the phones, it became 10, 12 rupees. Then we brought it online still, but when it became customer entered, today we are all making our own payments, we are all enabling our accounts to pay our utility bills. The cost has gone out of the banks totally, and it's all reconciled, it's all done automatically. It's happened from industry to industry. So that was the boom over the last 30 years our IT did. AI is just starting. So right now, the picks and shovel companies like NVIDIA who make the chips are doing well. Next level is who sets up the data center and the power suppliers to them. Power suppliers to those data centers will do well. Third is our companies who bring the end use, but then the end user has to be ready for it, has to be able to fund it. That they are not finding so much right now. Again, another trend I'm seeing is the GCC trend. So everybody, because there are now 2,900 captive and third-party GCCs running in India, uh, all our companies are looking at funding that and manning that and offering that kind of service. That's easier than AI, but AI will be the big one. But maybe another 2 years before we start seeing that difference coming on the revenues and the profit front.
On data center, though this is one of those long-term stories, but do you find good opportunities in the listed space for Indian companies specifically? I'm not sure whether we can talk stocks, but if you can give us some understanding that though a lot of these companies are now talking about the data center theme, how it will contribute, some of these are MNCs, with some of the companies did come out with the recent earnings as well. But are you also having much of a confidence there that these companies will able to deliver, and most importantly, are there enough players in the listed space?
Not enough. There are a few who are talking about it. We have not really seen that getting translated yet, but there will be utility level companies which will come in. So running a data center is not necessarily an IT company kind of a work, but it helps them, to gain clients, to have that capacity. Like the government of India mentioned, they are going to buy some 12,000 more GPU chips for the Indian stack, for the RAM weather program, and private players also linked into defense. So that way, data center will be done by the large corporates in the country, or the well-funded startups will be able to do it. It's a crying need. It will happen. And if you can link it up to solar along with storage, like last week, we had a few days where the incremental cost on the electric exchanges went to zero because solar was really performing in the heat. So we are going to see weekends where you will get a surge of free power coming in. If you can store that along with this data centers, I think that will become a business model. So there are some players, I won't like to name them, but one has not seen on the ground movement too much coming through yet, but it will be very big. It will be big. Everyone will use AI. And, we take it very simply. I was told by a Harvard professor, make sure whenever you're using any of these tools, you are thanking them, because in 10 years, the machine will remember who was rude and who was saying the please and thank yous. But then OpenAI came out and said it's costing them millions of dollars every time you're saying thank you, that was wonderful. and that helped me a lot. Or, this craze of creating portraits. That is costing so much data center capacity, so much cooling capacity, so much power. So that we don't realize. We are asking AI to write our emails. Students are writing. That day, I was talking to one of a doctorate guide. They had sent me a thesis to read, and then they called me very fast. They said, "Sir, don't waste your time." I said, "What happened?" They have this software which tracks if the thesis has been pirated from somewhere or plagiarized. And they said 92% of the thesis is written by ChatGPT. So don't waste your time. We are asking the student to rewrite it. So we are seeing things like that happen. And all at the back of it will be data centers. So they will be like electricity. You will need data centers to process all this. We take it very simply, write me an email, write a thank you, and put this, and immediately it comes. But it costs a
Right.
lot at the back end.
Right. Very interesting take, sir, and a reality check into what everybody has been doing using AI tools. But sir, just a while back, you were saying we must be focusing on the domestic focused sectors, given the kind of global uncertainty that we are seeing. So I wanted to take your view on the industrial space. How are you viewing, this space, and within this space, any particular pockets where you see there is value? We just had two results coming in. Engineers India, which had a stellar quarter, but Cummins India, on the other hand, it had a slightly muted quarter, but they had their domestic demand contributed most to their revenue, but growth, that is where the exports is where their growth really came from. So I want to understand, where do you think the industrial space is, and within that space, where is the value?
Yeah, very, very interesting. And if you had asked me the sector, I would have named that after finance. So thank you very much for giving me a lead in. Overall, if you look at the sector, where will the spend come from? The government continues to spend. So government spending is happening well. The second second spending is coming at the household and the single firm entrepreneur, proprietary, those kind of people are spending. The private capex is not coming through. So private capex is a follower always, and every year we get optimistic in December that this year will be the year of the private capex. It's not been happening for quite some time, and you get the answer in the macro in the output gap. When your capacity utilization is still under 80%, nobody is in a crying need to put up new factories. When all these tariffs came in, especially 145% on China, there was excitement, China plus one, this, that. All our exporters came back and said, I am not putting up a factory based on Trump policy, which might change in 2 weeks. And it did change, came from 145 to 30. How do you make a business plan in that kind of a scenario? So overall, private capex is still some part away, which is unfortunate. Otherwise, we would be growing at 8%. Why we are growing at 6.5% is because the government is doing the heavy lifting and the private consumption expenditure. The Indian household is doing the heavy lifting. Exports are not growing that fast. And fourthly, private capex is not coming. So in that, then, how do you look at the industrials or the infra? All the infra providers will do well. Power has taken a backseat last few months because of now there is some kind of a realization on execution. But I think power remains evergreen. So anything to do with power, whether evacuating power, whether producing power, transmitting it, or setting up storage units, renewables, I think all those will do well. The infrastructure providing companies, those will do well, and linked to government becomes a no-brainer. That's why your defense and railways always boom near to budget, or whenever you see big order flows coming through, they do well. And then the government capex related companies, those do well. Private capex, I think this year again, we are getting disappointed given the global overcapacity. Just to give you an idea, 21% of manufacturing goods move across a border in the world. So roughly 80% is consumed within the country. We have to find import substitution ideas where we can produce things within the country and consume them. And there, those industrials linked to them will do well. But overall, stick with the government sector or the very small retail focused capex. The big private capex is probably still due.
All right, Ajay sir, thank you so much for sharing that perspective with us. Thank you so much for taking the time out and speaking with us. Pleasure.
If you like this video, then like, share and subscribe to ET Now.